The noise coming out of the Fed over the weekend was really amplified by Raphael Bostic, who gave an interview for the FT saying that 50 basis points, it could be an option in terms of a hike in March. And of course, the last time we saw that was in 2000. If we are to prepare for a 0.5 percentage point raise, what does the playbook look like for this?
Well, you know what? I think we've got to concentrate on the economic data. Now, he's not the first person to suggest 50 basis points. Certainly some Fed watchers, some commentators have been airing that view, for the past few weeks. But if we look at the data, for instance, if we look at the GDP data that came out last week, now that on the surface appeared strong, but when you dig into it, it was a big lump of that was because of inventories. Now, that is something which suggests that growth will actually slow as those stocks get used in the next few months. So that's something which perhaps suggests, maybe they won't do 50. And then, of course, this Friday, we've got the non-farm payrolls data. If we look at the market consensus for that, well, it's only looking for a moderate gain. So again, nothing in that which suggests that the Fed should really step up the pace beyond the 25 that's already anticipated for the market. So I think it's data dependent. I mean, another factor is just looking at the inflation data. Most economists anticipate that this will be slowing during the course of the year, that we're close to that sort of peak level already. And so I think the Fed will be watching the data. But certainly in my view, there's nothing yet that will make it go from the 25 that everyone expects to that 50 in March.
Well, it's interesting you talk about some of the data here, because last year the inflation numbers were just so unknown. And there's a question to if even you knew what the inflation numbers would be, could you even figure out then what the market would do? In this year, we started out a very bullish dollar positioning. Where we're standing at the moment, Jane, is the paying trade for a higher or lower greenback?
I think that's a really interesting question, and I think that question is going to be asked repeatedly during the course of the first half of this year at least. Now, I think for now, I would remain dollar bullish. I've been dollar bullish for a while, but I am getting a little bit uncomfortable, particularly about the view for the dollar in the latter half of the year and beyond, and that's really because of the flatness of the yield curve. So, for instance, if we go back to the Fed meeting in January and we look at the market's reaction, the market really then began to price in an extra 25 basis points in rates for this year, bringing it up to 125. But if we look for next year, well, the market expectation didn't really move. And that curve flattening suggests that the market's thinking, the economy could be slowing, and that this cycle of interest rate hikes could be quite short-lived. And so if we sort of project what the dollar might be doing in 6, 8, 10 months' time, well, I don't think there's as many supportive factors. So for me, I think the dollar can have further to go for now. I think we can potentially see, 110 and maybe in euro dollar in by the middle of the year, perhaps as the Fed cycle gets going. But beyond that, I think the dollar could start to struggle.
Jane, how much of your view is complicated by a dollar that's viewed as the preferred haven currency?
Well, certainly that's a very important part, particularly when we do have these geopolitical issues going on, and these are really in the headlines. They have been for a while. Now, I do think, looking at price action, that the geopoliticals are playing second fiddle to what's going on in terms of Fed expectations. But that could change. It does depend what happens if tensions do escalate, in Ukraine, Russia. And also, we've got to remember, we've had those missile launches in North Korea, too. I think we've had around about 7 or so far this year, which is, really quite worrying. It is a lot. And so there could be more safe haven float because of these geopoliticals. Now, the dollar, it is still, the only real currency on the global payment system. Sanctions can be really painful because of that reason. They can be used because of that reason. And therefore, the dollar, because of that, is a safe haven. And that could amplify the dollar's upside in the next few months.